Well, hello, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar with CressCap Investment Research. And we're going to be discussing applying Quant to security selection. Now, with us today, I'm very pleased to have Steve Kress, but I'm also going to bring on Louis Gomez to introduce today's presenter. So with that, Louis, let me pass the controls over and go ahead and let's get underway today. Steve, if you can share your desktop, then Louis is going to introduce you. Welcome, gentlemen, and thank you for joining us.
Great. Thank you very much, Cynthia, and good afternoon to the listeners today. Thank you for your attendance. I'm Luis Gomez, Head of Business Development at CressCap Investment Research. It's my pleasure to introduce Steve Kress, our CEO, whom I've known for over 20 years, dating back to our joint tenure at Morgan Stanley. Steve has been an analyst, a salesperson, a portfolio manager, and an entrepreneur over his career on both the buy side and the sell side, and has long advocated the use of quantitative methods in the analysis and selection of securities. So we're going to learn a bit about this today. And so without further ado, I will pass it over to Steve. Steve, please take it away.
Luis and Cynthia, thank you so much for that warm and wonderful introduction. It's really an honor to be here. And I'd like to thank everybody for joining the meeting. And those who come later in the recorded session, I thank you as well for taking a look at our presentation. My hope is today that we can demonstrate how to use quantitative analysis, but I also want to demonstrate how we can make quant easy and a little bit more approachable. So what we've done is we've put together a slide deck to sort of walk you through a few of the steps that we actually use within our own investment methodology and process with our research that we put forward. When we are looking at quant, it's important to realize that quant is another type of research discipline. The same way you have fundamental analysis as a research discipline and technical analysis as a research discipline, there's also the quant world. As we dive into quant, from our perspective, we look at quant as a systematic collection of data and identifying trends. What supports that foundation, or what I call the three pillars of quant, would be the mathematical analysis, statistical computing, and really the third and most importantly is the scoring of factor groups. Now, again, we want to try to make this sort of easy to understand, and as I go through the presentation, we're going to take a look under the hood and see how this process works. And hopefully you'll find it's not that difficult and it's not that alien. Again, there are types of research such as fundamental research and technical, which are widely used. Quant is not as widely used, but I think as we try to break it down, hopefully the science will be employed a little bit more. With the foundation being the mathematical analysis, as you look at that, you'll think of that as a systematic study of continuous factors. When we look at statistical computing, we look at that as a science of collecting large amounts of data. And then with scoring factor groups, there are the conventional fundamental metrics such as value and growth, leverage, and what we'd like to do is score each of those metrics on a relative basis. I'm going to go over to the next slide, which will showcase to a certain extent the other types of research disciplines that are there. And I'm going to use the mouse to sort of highlight where I am with a specific discipline. So within the quant world, as we use that as a research discipline, it's very, very reliant on computer processing power. And we use that computer processing data, again, to collect large amounts of data and structure it. And then we add the pillars of the mathematical analysis and the statistical analysis. And our hope is when we combine that and we filter it and score it, it gives us insight into valuation and the historical performance on securities. Borrowing really from the fundamental world, what we look at, especially at CressCap Investment Research, is taking the fundamental metrics that you most commonly look at. And within fundamental analysis, we like to evaluate all aspects of a company. You'll typically have a senior research analyst and junior research analyst that will investigate the company, investigate the industry, and evaluate all aspects of that. They assess the management team, they assess the tangible assets, and they go through a lengthy review process of the industry, the market conditions, the economic regime, and they put it all together and try to determine if the point in time is a good point to purchase a security or if it's a poor time. Really, within the quant world, we pull a lot of elements from the fundamental analysis, but instead of doing one or two companies at a time, we tend to do it for thousands and thousands of companies at a time using the power of computer processing. Within the technical element of research, we're evaluating securities through historical patterns and statistics, mostly looking at trading volume and price patterns, and we use those historical patterns to help us determine the future performance of a stock. Many of you are probably very familiar with charting, and you have RSI and MACD and stochastics. Those will measure sort of a time and period or an overweight or undervalued aspect. Again, most of it using pattern recognition and that historical basis and foundation and taking those patterns to determine the future. I'm going to go on to the next slide, and as I go to the next slide, we'll wait for others to catch up. And the audience is currently at a 100% hit rate, so we're all on the same page now. Why use Quant? Well, as I had mentioned, it gives us the ability, instead of looking at one or two stocks at a time, really within our screens, we every night could look at about 30,000 stocks on a daily basis. And we have the ability to analyze the financial metrics and monitor a large amount of securities through that screening process and through the power of computer processing. What we find is the computer processing is much faster, obviously, than human processing. And sort of use an analogy, it would be using the power of an HP calculator to using your fingers to count. That's sort of the difference for us. Using that computer power provides you with an immense capability to assess many, many thousands and thousands of stocks at a single point in time. One of the benefits that we have by using statistical analysis and mathematical analysis without using what I would put forward as human bias in terms of talking to companies or assessing industries is that you do get to avoid bias and emotions. And perhaps you might have inherited at one point in time stocks from a family member, or as a registered investment advisor or portfolio manager. You might have a client who has brought in a portfolio of stocks that they've held from their grandparents, and that could be known sort of as an emotional bias. Or you might just be emotionally tied to a stock like Tesla because you feel the cars are great and you think that the company is going to do fantastic. Through quantitative analysis, we try to avoid those type of emotions and really evaluate a company based on the statistics that are there and the metrics that are there relative to their competitors. And part of the beauty of using that type of process is that you can actually look at a back test. So if you determine through your statistical analysis that you favor value and growth or a GARP approach, you could actually test that historically and see what the results look like. And that's part of the power of using quantitative analysis as well. I'm going to go through to the next page. And what we're demonstrating here, as we're just waiting for others to flip the page, and okay, it's great, we have everybody caught up. Over here, I'm exhibiting factor buckets and financial metrics. When we look at factor buckets and quantitative analysis, we're typically assessing factors that you would conventionally known as value factors or growth factors or profitability factors. Within those factor buckets, there are financial metrics, and the specific financial metrics would be known as PE or price to book for value. For growth, it could be revenue growth or EPS growth. We also use, in terms of a factor, actual EPS revisions, and this would be sell-side analysts and using their forward estimates, and we can actually score that as well. But again, we can go back to traditional metrics such as profitability and even price momentum on a stock as well, and look at that as a factor. The most important thing to realize is, as we're looking at these various factors, is that we compare each of those financial metrics to its peer group. I'm going to flip to the next page, so hopefully you can follow. And what I want to demonstrate on this page, as you're all caught up and we are now on the same page, is the sheer quantity of financial metrics that you could assess. So what's important to realize is you can see the headers, and again, these would be the factor groups such as capital spending or cash flow, growth, valuation. These are the factor groups, and underneath the factor groups are the metrics that we actually would measure. So you could be looking at dividend yield, you could be looking at return on equity, you could be looking at price to book, you could be looking at historical EPS growth rates, you could be looking at forward EPS growth rates. We actually at CressCap assess over 320 financial metrics. Now, that's definitely not necessary to be in the world of quant. You could have anywhere from maybe 5 different metrics to 20 different metrics that you like to assess. The truth of the matter is that there's a high correlation within the group. So if you're looking at value factors such as PE or EV to EBITDA or price to cash flow, when you start measuring them all together, there's a fair amount of consistency. So there's really no reason to look at 320, but we just like to break them all down. I'm going to take us over to the next page. And as we're all caught up, what I really want to demonstrate through this page is how we make quant easy to identify and how we utilize academic grades in that process to make it more of a user-friendly experience. So as you can see, sort of starting with the top, which I've been discussing are the factors that we use and the financial metrics that we use. When we take those metrics and we want to score it on a relative basis, what we develop is known as a Z-score. So just to give you an understanding, simply put, a Z-score is the measure of a financial metric above or below the mean score. So if you were going to look at PE ratio, you would take that and measure that against the rest of its sector. So if you're looking at the PE on Walmart, you would be looking at the PE versus the rest of the consumer discretionary sector. If we are looking at a growth rate for earnings for Apple, you would be comparing that earnings growth rate to the rest of the IT sector. And again, we take that one metric and we create that score, and that score lets us know where it measures in terms of its relative strength or weakness to the sector. Now, if you had to look at a page that was full of Z-scores, that would be quite tiring. So what we do to make that more of a friendly experience is we actually create ranges, and those ranges are simply identified by how many academic letter grades there are. So there are 13 academic letter grades, A through F, and what we do is we fit those Z-scores into that A through F range, and it makes it a little bit easier to look at. And again, we use that Z-score, or we use that letter grade of an A plus to say, okay, this is a very strong metric relative to the group. If we take the various metrics for value and for growth and for profitability, and we see straight A's across the board, that helps us to determine that a stock would be a buy. If we see a lot of poor grades, such as F's and D's for a company, we would know that that is most likely a sell. I'm going to take us over to the next page. Now, hopefully this doesn't look too complicated, but what we've done here is we have sort of just tried to create a table where you can get a better understanding of the fractiles and the grades. And as I mentioned, there are 13 fractiles, which measure up against the 13 academic grades of A through F. So taking an A plus, when we look at a Z-score, Z-scores will range from +3 to -3. Again, this part can get pretty complex if you're looking at a lot of scores and a lot of financial metrics. And that's part of the reason why we bring it into the fractile of A+. So for us, we like to say anything that has a Z-score of basically 2.5 to 3 would be in the A+ camp. Anything that would be, say, from 2 to 2.5 could be an A. And then conversely, if we went to the opposite side of the totem pole, anything that would have a negative Z-score relative to the group of, say, 2.9 to 2.5, that would be an F. So I think this gives you an understanding of how we take these Z-scores and we try to simplify it by putting it in the academic letter grades. I'm going to take us over to the next page. And this is sort of a perfect picture of how you can come up with that idea generation using the academic letter grades. So what we've done is we've copied a page from one of our tables looking at the materials sector. And you can see we look at an overall grade. And what we're doing is we're taking the average of the value, growth, EPS, profitability, and momentum. And you can see what those grades are. So, for example, on Reliance Steel, which is the first stock that comes up, you know, Reliance Steel has a B+ value grade relative to the rest of the materials sector. If you go one stock underneath that and Nucor, you could go to the EPS column and you can see that the EPS revisions are an A for Nucor versus the rest of the material sector. And what we do is we take the various style groups, such as value, growth, EPS revision, and we take an average score. And when we look at those average scores, we can then see how they rank compared to the other companies in the material sector. So we can actually create an overall rank. So this just gives you sort of a picture of how you can use Quant, really sort of simplify the process into a user-friendly experience and quickly determine which company is the strongest and which is the weakest within an industry. I'm going to take us over to the next page. So I just want to make sure that everybody's caught up there. And we're at about 94% completion. Sorry to slow it down, but we have to make sure that everybody's computer is caught up as we move on to this next slide. Looks like we're almost complete, so I'm going to just take us there. So, you know, looking at quantitative analysis versus looking at fundamental versus technical, I like all research disciplines, but you know, part of why I want to highlight the importance of including quantitative analysis is that we like to look at multiple factors. We don't want to be dependent just on value necessarily, or just on growth, or even just on GARP. If we have the ability to look at different factors from the wide range that I showed you, it helps us determine where a solid foundation is for a company when we could look at something that collectively looks strong on profitability and EPS revisions and momentum. That's one of the aspects that I really enjoy about quantitative analysis, is it gives us a wide range of factors that we can look at and then determine collective strength by pulling out the companies that score well. So if we're looking at 2,000 stocks in the United States and we say, okay, we just want to look at companies that have strong growth, good value, strong profitability, we could actually narrow that 2,000 down to maybe 200 ideas where the companies collectively have those traits. But there are other reasons why Quant is good too. You don't tend to have a bias, that emotional bias, on a company because you like perhaps what they do without really measuring it relative to the other companies. I also like it because it does give you the flexibility to look at multiple investment styles as opposed to just being dependent on one style. I like the number of tools that you can use in that screening process to identify opportunities and patterns. I also like the quantitative analysis because we can pull in the outlook by the sell side community. So if there are 30 analysts that cover a community, that cover a stock, we could bring in their revenue projections, we could bring in their growth estimates, and take a look at all that data and make it part of our scoring. It also gives us the ability to bring in data from outside vendors, so we're not necessarily just dependent on our data. We could use companies such as Bloomberg or Reuters or FactSet and pull in data, and data that's been scrubbed pretty well too. And it's important to have, the best data that you can. And mostly, it also helps us manage our risk, and it helps to prevent against downside risk by using multiple factors and also not being dependent on a particular bias. So there's really quite a few reasons that you could be using quantitative analysis. I'm going over to the next page. So when I was looking at that last page, one of the things that I said is that I actually like to use a number of disciplines. Although I heavily rely on quant, I do like to use fundamental analysis, and I like to look at technical analysis. I know within our research process at CressCap, when we put a buy recommendation out or a sell recommendation, we use the quant, but we also validate our research with technical analysis and fundamental analysis. And part of the reason why we do that is we don't want to be blindsided, for one. If we like the stock from a quant perspective and it's hated by the technical community or it's hated by the fundamental community, you really have to pay attention to that, because stock prices are driven by investors, and if your investors have a different view entirely, that's just a mess that you don't want to get involved with. And that's one of the reasons why I like to bring in other research disciplines, just to make sure that collectively we're all sort of on the same page. I'm going to take us over to the next slide. And this is going to demonstrate sort of how you can blend together the different research disciplines, the quant, the technical, which often is referred to as market timing, and the fundamental analysis. And fundamental analysis, is definitely core to our overall process, but we used our quant screens to really identify the optimal valuation and to validate behavioral pattern recognition as well. What I want to do here is we're looking into the blended research disciplines. You can see some of the statistical inputs. So you could be looking at inputs from the sector or sentiment, cycles, liquidity, risk factors, and that can all fall within our funnel here. In terms of market timing or technical analysis, you're incorporating market psychology, you're incorporating capital flows, you're incorporating historical patterns, and we bring that in together, and we kind of look for the sweet spot along with the conventional fundamental analysis of identifying where are good values, where are strong growth rates. And once we do that and we hit that sweet spot, we can identify the best relative valuation and execute that accordingly. I'm going to take us over to the next page, which will pretty much be summing up our presentation, sort of just an overview of what we're saying today, that a quantitative framework can really help you measure hundreds of factors and financial metrics, and it gives you the ability to systematically screen all of those financial metrics, which is really well beyond human comprehension if you had to do it mentally. Having the power of computer processing helps dramatically when you're trying to look at which companies have the strongest and weakest financial metrics. Again, you could take a look at this, in terms of the overall factor groups. So your helicopter view is looking at, the valuation groups, the growth groups, the leverage groups, and then the underlying metrics there. Part of the overview of what we provided today is that you have the ability to do back tests. So if you have a particular philosophy that you like or methodology, you can back test that with quantitative analysis, and that will help to validate your specific strategy. And, more or less, you also have a global database that could be available to help you assess companies throughout the world, as opposed to being just limited to a small universe of stocks in the U.S. Maybe it's, just looking at having the ability to cover like 15 stocks in a portfolio or 20 stocks in a portfolio. You have the ability to look at 30,000 stocks worldwide. And I think that is going to bring our presentation to an end, and we're going to go over to our questions now. So I'm going to take a look at what we have in terms of the questions that are there. And I think I'll start off with one that says, how would you use the quantitative work to generate ideas? Which is actually what we do at CressCap Investment Research. We actually run the screens for people so they don't have to run the screens themselves. And what we do is when we take a look at companies and we run these screens and we identify financial metrics and we score those financial metrics, it will exhibit to us which companies are the strongest and which are the weakest. And when we want to find stocks to buy, we could take it from either a region or within a sector or within an industry. So as an example, if I want to take a look at the beverage industry, say we heard Jim Cramer on TV or equity strategists in the market, and they're saying the markets could start to get difficult. You might want to seek out some safer companies. I would look to beverage companies. We would immediately go to our CressCap investment research and take a look at the beverage sector and see which companies have the best fundamental metrics and look the most sound. Which companies offer the best value, which ones offer the best growth. And by looking at the academic letter grades where we see A's or A minuses or B pluses, we can quickly see which companies would be the best ideas. Okay. So I'd like to thank you for taking my questions. Luis says,
next question from Kevin, yeah.
Okay.
He's asking, how are things like market cap factored into research? I know the size of a company can have a strong impact on financial ratios of a company based on the scale of the business and the company business cycle. How do you do it? Also, I'm curious how you process data. Are your database updated in real time based on data feeds, or are the Z-scores, as an example, updated on a manual basis? So that's a couple different questions, but first, why don't you deal with the market cap?
Sure. Well, market cap definitely that does have an influence, and we do look at market cap as a factor. A few things that you could look at from market cap is actually the change in market cap from the period that you're in now, going back to a historical point in time. Could be a one-year change, could be a quarterly change. So that's one way to look at market cap. Another is to look at liquidity as a factor as well. So you definitely hit the nail on the head. It is a factor that we do employ within our research, and those are just two of the ways that we tend to look at it. But it's important to keep in mind that we also might be looking at small cap companies. So again, it's relative to the size that you're looking at. We tend to look at large cap, mid cap, and small cap. So obviously, if you are looking at the small cap companies, you have to create some flexibility within your system from liquidity. You might keep things in mind and still score the change in market cap from a one period compared to a historical point in time. And again, that's something that we would still measure, but you have to allow for flexibility based on the type of investments that you're looking for.
And then the second part was are the databases updated in real time based on data feeds, or Z-scores, as an example, updated on a manual basis?
Right. So it is done systematically. We update it every single day. Some people would, refer to that as, almost real time or close to real time, but we update it overnight. We don't do it on a second by second basis. I think it's really important to have fresh research and research where you assess a company and its financial metrics every single day. Part of the issue that I have if I go to a firm that produces investment research, and that research report could be about 4 weeks old or 2 months old, is from my vantage point, you cannot make a sound investment decision on a report that is 8 weeks old. That's like going to a newspaper and trying to make an investment decision based on an article that was written 8 weeks ago. However, I do find if you update it on a daily basis, that's definitely enough. So hopefully that will answer your question.
Okay. Moving on to the next question from Arik. You mentioned Quant helps avoid behavioral biases because of the algo, just looking at a list of stocks. However, since you use a fundamental layer in your process, are you reintroducing a behavioral bias into what you do? What do you think about it?
Okay, so there are ways that you can remove those behavioral biases, and we do that. So you're sort of not taking your history and what they refer to is looking forward with that history. So there are measures that you use to avoid that bias, and we certainly employ it within our own research. It's particularly important, like when you look at a back test, you want to employ those type of sort of anti-measures to prevent just having or teletyping what your performance is by picking out certain features within momentum that would make you look good. So very, very important question, and very important, especially when you're conducting back tests, to avoid that.
Okay. Moving on to the next question from Michelle. How do you weight the various factor groups in order to come up with a single score?
Oh, I like that question a lot. So what I find with many of the quant screens that are out there is that they have too much of a bias towards momentum. And even if it's not intentional, if you're looking at growth as a factor, if you're looking at EPS revisions as a factor, if you're looking at price performance as a factor, that tends to make your model pretty momentum oriented. So what we do is we actually double weight value. And to us that is, and we've backtested this over time, by sort of double weighting value, it often is an anchor against being too heavily oriented in the momentum camp. And again, just by having growth and EPS revisions and momentum, it can make many screens too momentum oriented. So I like your question. I like that you point that out.
Okay. I don't think the next one is one that we should deal with online. We'll take that off.
And who just tell the person who wrote it that we'll contact them offline.
Yes, I'll do that now. Also, Cynthia, do you want to, if there are any other questions that are out there, we're happy to take them.
Okay, I'm not seeing any additional questions that have come in, but what I would like to do is thank Steve Kress for today's presentation. And Luis, thank you as well for your participation, and everyone else who has joined today's webinar. Now, I do want to let you know we have been recording today's event, and each of you will get a direct link to today's recorded playback soon after today's session ends. So if you do want to come back and review the concepts that Steve went through today, simply watch your email for a direct link, not only to our playback, but also to the slides that have been in use today. So with that, okay, and I see Luis has answered Michelle as well. So with that, we are going to conclude our event today. I want to thank all of you for participating and remind you that we'll also be posting today's recording as well as the webinar notes on the Interactive Broker website. You can find it underneath the education menu. Follow the webinars link for access to both today's presentation and the notes that were used. Also, do want to let you know that CressCap is a research provider that's available and has been integrated into the Trader Workstation. You can find additional information underneath the pricing menu. Simply look for CressCap, for research, and then you can find the CressCap logo, same as what you're seeing on screen, will also give you a direct link to their website as well as additional information on their research as well. So with that, we are going to conclude our today's session. Thanks all for your participation today and have a great rest of your day. You can exit using the X in the upper right-hand corner of the screen. Thanks, everyone. Have a good day.